It's a hard thing to explain to people that the U.S. economy could be accelerating because some major change has been undergone, at least initially here, from at a bare minimum an expectations perspective. Tack on a couple good economic data points, but it's so hard for us to communicate that there actually has been something that changed in the U.S. that it's even harder to reiterate that it has not changed in Europe. I think this is a very difficult time to actually communicate to people what the hell it is that's going on. Do you think that's accurate?
I completely agree, and the reason is because we have been told there's an entire generation of traders out there in the market that have only lived with expansionary policies, right, and with the view that central banks are going to create magic out of unicorns. And unfortunately, because it's based, you see, the problem that you and I face, Keith, is that we talk with facts. They talk with religion, because when it doesn't work, they say it would have been worse if it hadn't been done. Yeah, I mean, yesterday I was going through the numbers of the ECB results of QE, and you say, look, it's failure everywhere. So, and the only answer you get to that from Keynesian economists is it could have been worse. So it could have been worse as a concept, to me, doesn't work. To me, what's important is that what we're seeing now, and the reason why the market got so surprised after the Trump elections, is that strong currency, more supply side, lowering taxes, and therefore creates, at least in principle, exactly the same real effect, but shorter term than what they expect to achieve in the longer term through demand-side economics.
Yeah.
Because just think about it. I don't know if it's going to happen. Obviously, it's still a promise. But if Trump lowers corporate tax to 17%, and out of the $2.5 trillion that U.S. corporates have abroad, he brings, say, 1.5 trillion, which is what consensus estimating is possible. All of that is putting more money in because the dollar rises, and obviously the dollar rises means that the middle class have more opportunities, not only to consume but also to get out of financial holes that they get into from time to time. And the other thing is, obviously, if you lower corporate taxes, and it's proven in numerous studies, it has a direct impact on investment, on jobs, etc. So I think that what we're seeing is we're going to get you and I, a lot of people denying what will happen if policies remain as they look to be aiming, denying what will happen, saying that it's a coincidence, that it had nothing to do with policies, because supply-side economics are completely ignored right now by the academia.
Well, supply-side economics were shunned by both Republicans and Democrats. Republicans
exactly.
and Democrats, as you know, went with demand-side economics. That's why I've always tried to say there was really no difference in the monetary policy of Bush and Obama. So you had 16 years of demand or QE-based policy, and that's an ideology, or it's a mantra. At the same time, you have supply side, and whether or not it works, I think it's a responsible way to articulate it the way that you did. We'll see if it works, but the data dependence of it all is going to help reveal whether or not it is working.